Morning. So we got channel members Rob, Gary, Dan, Darren, Tim, John Rush. Good to see you, sir. Svenborn, Diane, Serge, Will, Craig, Donald, Rob. Good to see everybody. And channel subscribers like Doc and Larry, Piet, Catherine, Mad. Mad, you jump in and add a couple different accounts, I think. Melissa, good to see you. B, good to see you. Thanks for being here, everybody. You know what's crazy? This has nothing to do with the show today. I just, fun fact, the nerd in me has been like thinking about this. If the Earth was 15% bigger, like heavier, more gravity, 15%, we couldn't go to space. Like it would be physically almost impossible with our current rocket technology, liquid fuel rockets probably would not be able to attain space, our current propulsion technology. I thought that was fascinating. Fascinating. I think about all the technology that we've come up with. Now, the flip side of that, a lot of people have this trouble envisioning where AI is going and the fact that in the not so distant future, it could be smarter than all of us put together. Like smarter in the fact that we can't even comprehend how smart it is. So it's kind of, I mean, kind of interesting. I've posted some articles in Discord before that freaking scary, but it's one of these days might wake up and things are different. I was reading something by the guy who started Patreon. He was saying, when film started, cinematograph, they called it in the beginning. We had plays, like physical plays. You came to a theater, you sat down, you watched the play. And when they developed the motion picture camera, they went to like the 20th row, they sat down, they centered the stage in the frame, and they recorded it. And then they played it back for people, and people are like, oh, this is lame. This is like, why would you watch this and not just go to the play? That's kind of the way AI is right now, if you think about it. It's like, why would I look at this garbage when humans create such better stuff? It's like the things that AI is creating now is just like the best stuff we can envision to create with it until we figure out how to actually use it as a medium. At least, this is like for the creation tools type stuff. But what if, the whole thing is it can become smarter than us? And that's just kind of blows my mind a little bit when I sit here and think about it in the background. Anyway, let's talk about that American dream, the one that white picket fence, 2.5 kids. It's kind of scary to think of a half a kid running around. Anyway, brand new SUV, beautiful picture, right? Picture that car dealership, the lenders, all this stuff. It's been going for decades. And boy, oh boy, have Americans been buying. But what happens when the dream is built on a foundation of sand, or more accurately, a 7-year, $1,000 a month car loan? 7-year, $1,000 a month car loan. Think about that. Let's be honest. You probably shouldn't buy a $50,000 car if you don't have the cash in the first place, right? You shouldn't have to finance it for 7 years, 8 years, 10 years. And guess what we're seeing right now? Slow, grinding, dare I say, delicious, predictable implosion of the subprime consumer credit market. We talked about this before, but if you haven't heard, don't worry. The mainstream media is a little busy with, well, I guess a shutdown. Just blabbing about it. But if you listen closely, you can hear it. It's the sound of 1 million car payments being missed. It's the sound of tow trucks picking up cars in the night, the repo guys. It's the sound of subprime auto lenders like Tricolor Holdings filing for bankruptcy. going up in a puff of smoke. It's not just cars, it's everything. We're financing everything in what is being called the K-shaped economy. The fancy way of saying the rich, they get richer every car payment, every boat payment, every payment for buy now, pay later. And everybody else is, well, signing on the dotted line for a 7-year loan on a used Honda Civic. I mean, it's crazy. Now, I know what you're thinking. Sounds pretty bad. You're right. It is. For a lot of people, it is pretty bad. For savvy investors like us, though, savvy traders, the ones who are not afraid to look into the abyss and try to pick out some opportunity, this could be interesting. You see, when there's blood in the streets, it's time to buy, at least if you find the opportunity. And right now, the streets starting to look like a scene from a Quentin Tarantino movie. We're seeing major consumers, these major consumer lenders like Ally Financial, Upstart, even Capital One, starting to take a beating. Their stocks, when they announce these hiccups, they get hammered as they face the music for not being so vigilant on bad loans. You know, they've been handing them out like candy at Halloween. For the bold investor, this could be a shorting opportunity. Or if you're more of a bottom feeder, just wait. You might start looking at distressed debt funds. Pile your cash. These guys, they swoop in, they buy up bad debt for pennies on the dollar, and then they squeeze the blood out of a turnip. It's a risky game, but the rewards potentially massive. And what about the flip side? Where's the safe harbor in all of this? Well, think about what people have to buy even when they're broke. You got to eat. Still got to keep the lights on. Still got to keep the heat on, right? So, consumer staples, utilities, boring, but it's the potential way to avoid the chaos. There's going to be more chaos. Here's the kicker. Big banks, the ones who caused the whole 2008 meltdown, great financial crisis, global financial crisis, however you want to call it, they're actually in a pretty good position right now. They spent the last decade de-risking, digging moats, and due to the new regulations, most of them sit on a pretty good pile of cash, ready to scoop up some pieces when the smaller guys eventually go bust. So an ETF like XLF, the financial sector spider fund, might be an interesting play. It's a way to bet on the big boys cleaning up the streets and potentially making you and them a killing in the process. Now, I'm not your financial advisor. I don't play one on YouTube. I'm just a guy on the internet with a camera, healthy dose of cynicism. But I'll say this. The cracks are getting deeper. They're getting longer. There's more cracks. The foundation is crumbling. While everybody else is watching the shiny AI bubble out there, smart money quietly positioning for what might come next. So just be careful. Keep an eye on it. It's the little things that aren't making the mainstream headlines. Do your research for the love of your own account. Don't take out a 7-year loan on a $50,000 car, especially at these interest rates. Stay safe out there, my friends. Be careful. Be careful. Especially if you're in the market for a car or a house. Yeah, it's actually cheap. It's actually more affordable to rent right now than it is to buy a house. It's the craziest thing. One of our members, Goose, has been wanting to pick up a new place to put down some roots. I keep showing him the numbers, like, it's not time yet. There'll be a time when buying is better than renting, but right now renting is way more, like, fiscally, renting is way more affordable. Maybe like, well, your money's just going down the drain, but with the overpricedness in housing right now, it just, like, You're talking about you could take a 50, maybe 60% haircut when we finally correct. So just be careful out there. Be careful out there. Be careful out there. Be careful out there. Nobody's watching out for your money more than you. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining. Hopefully you're entertained. Are you not entertained? And not a recommendation to be buying or selling any stocks, options, bonds, forex, futures, cryptos, treasuries. You might lose money if you trade them. Be careful out there. No financial instruments. I'm not recommending you buy or sell any financial instrument. So if you desire personal financial advice, hire and consult somebody that you trust to be a financial advisor, tell you what buttons to push. That's not me. Don't ask me what you should do with the trade, what trade you should get into. It's just, I show off what I'm doing in case nobody's, in case you're new here. I showed this off right here. It's on K-Info, posted publicly. Share the link in the chat. It's right here. You can check it out. Yeah, this is my all-time right here. AT, all-time, 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 all-time. Look at just this year. 27,000. Not bad. Especially considering that I only started this on tax day. Right there, look. April 15th is where I started. Before that, nothing. So you consider that was, halfway through April. So May, June, July, August, September, almost 6 months. Like a week away from being 6 months. It's not a bad shake, right? I mean, it's on pace to be like $54,000 this year. Just in this one account. I have other accounts. But it's how you manage it. Like, does your profit and loss curve look like this? Or do you have big... Is yours more like this? I like to make consistent gains. Every now and then, you get a big one. Go out fishing every day, catch dinner. Every now and then, you hook a big one. Every now and then, one gets away. That was actually hedge play, protecting all of this. Hedge play didn't work out. Kind of glad the house didn't burn down. Didn't have to collect insurance. So, be careful out there. It's time to evaluate what you're doing. We got 3 months left. Well, a little less than 3 months left this year, 2025. Is this what your numbers look like this year? 90% win rates? If they don't, what are you doing? Are you negative for the year? What are you doing? Now, I get it. Trading's hard. A lot of people lose money. You look at for the year, come down here. I'm actually ranked 195th for the year. And that's just 12 months. That's not year to date. We could probably adjust this and click a year to date button. There we go. Year to date, 165th. Out of thousands of people, that's only 165 people making more than 27,000 trading. This game's kind of hard. Be careful out there. You might lose money. Look at the calendar for the week. The government's still shut down. No big deal. Doesn't seem to affect the stock market. As I said, leading up into it, a few of you were worried. And I was like, yeah, it's probably a nothing burger. So be careful. We can stay shut down for a while. Now, FOMC minutes are due out tomorrow. Are they more hawkish? Look at all the speakers, too. Look at this. Look at all those speakers. They're trying to control the narrative that comes out with those minutes. Trying to steer the narrative. And all these speakers in the morning, too. Look at that. Look at that. They know those minutes are coming out. They're trying to get ahead of the narrative. This is different than what used to happen back in the Greenspan days and the Janet Yellen days. Powell, he likes to go speak after every time that they make the rate change announcement, even if it's no rate change announcement. He loves to, like, he always speaks. Like Powell, before Powell, Janet Yellen didn't do that. Greenspan didn't do that. He likes to get out there and try to control that narrative, jawbone the rates where he wants them to be, try to steer the economy. Dangerous game or smart play. I don't know. It's interesting, though. And then we've got the man himself speaking on Thursday. Right there. We have 30 minutes of awesome coming up at 5 p.m. today. In case you didn't know, in case you've not been a part of this. 30 minutes of awesome is the only time of the week where I spend my time when the market's not open going through your requests. So 5 p.m. today, Tuesday, October 7th. I'll be back at 5 p.m. Eastern time. I'll be live. We call it 30 minutes of awesome. It used to be 30 minutes. Lately, I hang out for an hour, take requests. Channel members get priority. So if your name's in green, you got a little star by you. I give you priority. You can ask as many tickers as you want. Subscribers, you get 3. Bring your top 3 favorites. I check them out. I don't give you advice, but I kind of predict where it might be headed based on all the things I do. So jumping on down in here. Ooh, look at that. So I've developed a new system. I call them cash alerts. Right here. Brand new one just fired off. Drag this over, show it off. Right here. QQQ, you sell the October 8th, 608 put, collect $1.60. You buy the October 8th, 607 put on QQQ. This is, QQQ. Buy that for about $1.28. You get a net credit about 32 cents, plus or minus 5 cents. Close target 50%. It's dangerous to hold more than that, or more than that, 50%. It's what the system is based off of. The risk 68 cents. Potential return 23.5%. And if you want a $1,000 risk, you're gonna have to put about 14 contracts on that baby. Right there. So I've been working on this. The win rate is pretty ridiculous. Pretty ridiculous. I've taken my Apollo system that I built last year and that I show off the daily charts for every day. I took that system and I built triple thread out of it to up the frequency of trades and make it more fun. And we've traded 0-day options on that. That's kind of, like, let's make it shorter term. Let's make it faster to potentially book gains. And then, there were complaints with Apollo. There were complaints with triple threads. And I spent a bunch of time trying to figure out, all right, how can I solve all the problems? How can I help people know exactly what to trade? Because that was a big complaint with Apollo. And we tried to solve that with triple thread. And it gave you the exact option pick. But then people still, having trouble. Just don't know which ones to get into, blah, blah, blah. The win rate's not as high as I wish, blah, blah, blah. Lots of things. So I spent a lot of time and effort going through this, trying to up the win rate as high as I possibly can. And right here's the win rate for this system this year. Looking back, January 1st through September 15th, 89.7% win rate on these trades right here. And had you put like $1,000 risk on each one, that's the net profit with a 2.6 profit factor. That's kind of crazy, I feel like. And if you want to, I'm going to do the world premiere on Sunday this week with my man Jack Carter. And I'm going to throw the link in the chat here if you want to register. Right there. Right there. And Sledge is an awesome trader, man. Like, Sledge, you just kill it, man. You kind of, everything's clicking for you. And Skaggs started having a lot of success recently. I build stuff that works. It just, some of it takes more effort to actually internalize and kind of get it. You know, there's no handouts in the market, so nothing's ever free. Nothing's ever free. Got to work for everything you ever get. It's been my life lesson. So be careful out there, everybody. You may in fact lose money. These are 1 day to expire. That was that's a credit spread. That's what it says. It said credit. Well, I don't know what part of that you didn't get, Ted. It said credit. You sell one and buy another and get a net credit. That's by definition a credit spread. So it's if you don't understand the trade, for the love of your account, don't do it. Just trying to help simplify things, though. In fact, I may put that one on. Let's see. The alert go. There it was. It's let me see if I got the right account going here. The QQQ. October 8th. Yeah, QQQ already moving and shaking here. Let's see. It looked like this. You go like this. You go ching, ching. It's very quick and easy to do. 31 cents right here. 30 cents. Let's do a few contracts. I'm not going to do the full $1,000 risk. Let's change accounts. I want to do that one. And oh, it's cool. The button. Here it goes. And fired off for 30 cents. There we go. I got 30 cents credit. Now, let's see, pull this up, create the opposite order. Now, 50% profit, 15 cents, review, and send that off. And just let it cook. Tomorrow, if it doesn't close, probably like 2 or 3 in the afternoon, probably have to take some action. But there's the trade. That was easy, right? That's how it rolls. So, did it live for you right there. If you're interested in that, I'm doing a world premiere with Jack Carter on Sunday, 1 p.m. Eastern time. A couple of people give me crap about that. If you can't make it, no big deal. We're going to talk about it ad nauseum. Like, you'll get offers to watch replays. There'll be tons of stuff. But that was the time the company said we were going to do it. And so that's when we're doing it. Anyway, I've been taking almost all of those trades because they just kind of been working. So just kind of been working a lot. High win rate, high profit factor. Here's the high, here's the low, and we've already spiked the potential target right there in the near term. Boom. 6,800. Holy bananas, man. I talked about it, how SPY, S&P 500 might find its way up to 6,800, 6,850 before we meet a more substantial top. This little baby pullback here. Look at this bigger pullback from a few days ago. And we're coming up like at 67.78. Get up there, we might find a little resistance, and then 68.28 above that. You can see we're kind of bouncing, like ping-ponging in these. Came up here, didn't stop at the 1448, came back, retested the breakouts. Trying to go a little higher, retesting, holding a higher low. On the path for 67.78. These are the same patterns I use for everything. Same patterns cooked into that alert I just showed you. Same thing. It takes advantage of the same kind of patterns. How does it know which one to trade? It's all based on my secret sauce. Now I did create a. There is a this right here, Apollo ACS. That's automated credit spread. That was my personal lingo for it. Automated credit spread picks. I created a special version of Apollo for those credit spreads. Like I said, I was trying to solve all the issues people had with it, up the win rates a little bit. And it just, like, it doesn't teach you how to trade. It just gives you alerts. Like, straight up, honestly, if you just don't care about doing the work yourself, that thing just does it for you. So, just does everything. How do the alerts come? They come in Discord right now. Team's trying to figure out how to put them in Telegram, and they're too fast for, I mean, like, they're not really super fast, but they are pretty quick trades. So I just got the alert that I got filled on QQQ to get in on my watch. Obviously running slow. So in Q, I swear I delete all these lines every day. And we had this pullback. Man, we're same kind of ping pong stuff, but getting a little deeper here. That looks like it could be 5 up and a retrace. This might go much bigger here. NQ might be about to take a bigger move up. See that expansion there. Russell, I still expect the move on up to that fib line extension. That fib line extension being 2600 from this big pullback that started in November of last year down through April this year. Still haven't gotten, you know, S&P's up here already, even up here already, but Russell still hanging out, just barely breaking out to new highs. I would expect it to come up to here, even though the wind up to this has been rather bullish. If we're going to, you know, but this recent pattern suggests we're going to see an expansion up to the 2600 level right there. Finally catching up. Oil down below supports, but it's hanging out where that support is. There's always some sort of support until you get down in clear free air or up in clear free air. If we can break down below this kind of level down here around 60, we may very quickly drop into the low 50s, if not all the way down to 50 on oil. Gold. Saw big news this morning. We were clearing $4,000 an ounce for the first time in history. Aren't all the higher prices like the first time in history? I mean, like, wasn't 3,900 the first time in history? I mean, it's kind of ridiculous to say. Still expect us to find some confluence coming up right up here around this 4,100 area. I mean, this is going straight vertical, and it's all kind of on the back of Japan deciding they're gonna, like, right now, the narrative is around Japan gonna fire up the money printer, but they haven't even done it yet. Like, they just elected a new. This is the craziness. This is just anticipation of that happening. The new prime minister hadn't even started doing jack squat yet. Look at that, right to that fib line. I'll be dang. Look at that. Look at that hit right there and stop and pull back. So we may see this pull back for a couple days before it continues on up. If we get that continuation, 53 could be a real number we go on up and hit. You know, we do have levels at 50, 51, 52, at 53 up there. But I expect the party to keep going until the cracks get so bad that something breaks. What's going to be the something? my crystal ball doesn't tell me what's the something. It just tells me that something bad's coming. It's kind of somebody had the analogy yesterday. It's like, yeah, here we are in October. Like, I know, I know it's gonna freeze outside. Right? Like one morning, I'm gonna wake up and there's going to be frost on the car windshield. What day is it gonna be that happens? I don't know. What weather system is gonna cause it? I don't know. But one day there's gonna be frost on the windshield. It's kind of like one day we're gonna have a bigger correction in the market. Lots of cracks are forming. Like we've pushed to ridiculous levels. Let's keep throwing that out there. If we can push through that prior high, coming up here. Price seems to be on that path, going up to meet that roadmap line coming down. Yeah, this was the roadmap line coming down, which it's going a little flatter pace here. This is the price coming up. We may meet it somewhere right up here, another 2 weeks or so. Look at the Mag 7s. Apple continuing to do absolutely nothing for, what has this been, 2 weeks now? 15 days, yeah, 2 weeks. Nothing. Half a month. No trend. No nothing. Amazon. Be careful. We decide to take a detour down below that, we can go down in a vicious way. If Apple breaks out, just circle back real quick. 276, 292, upside potential. Amazon, if we were to bounce here, break out, 257, 271, upside potential. If we break down, potential to come back down and make a lower low, 150. Google, potential for 263. We're just kind of taking a rest here. We may dip down, retest 230, but 263 is probably in the cards. Meta, doing kind of like Amazon, retesting the roadmap line here. If we can turn back higher, break through a 618, that next fib line up, probably where we're heading, that would be 840 or 839. If we push down through this, deep retrace, maybe even down to a lower low. Be careful. Be careful on that one. Microsoft, finally hit the resistance, turning red. This can take us down. Back down, test this zone here. Right in here. And if we don't hold that zone, we could take a spill further down here. Now this one already did the big 3-wave correction thing. It was ahead of its time here compared to the rest of the Mag 7s. This one started last summer. Made the lower high, made the lower low. Like I was talking about, potential for Apple. Made low. We've only made one low. We haven't made a lower low. Amazon made one low. We haven't made the lower low. Google decided not to do that pattern. I guess maybe it did it with Microsoft, but it did a little crazier. It went higher high and then lower low. So maybe it was the same pattern. Meta, you can't make that case at all here. So this one could come down. So Microsoft already did that back here. They went higher high. Like that was a 62% gain, but now we need to prove that that breakout's going to hold before we can go on higher to higher levels. 565 next upside, and then we can run a fib line off of this correction when it finishes up, if and when. And that gives us some higher targets on up here, 610 even. So looking for that to come down, retest the breakout, and then set up another move higher. NVIDIA keeps being, this potentially it did it, the 3-wave thing, like from last summer, moved down, went a little high, came down for a bigger lower low. So maybe that was the correction and we just got a little sparky on the upside here. But right now, potential to go higher, 212. Potential to come back to retest this breakout. Support is also in there. So 152 and 212. That is a giant range for something that moves $25 billion of money for every dollar it moves. Be careful out there. Tesla continuing to be crazy. They've got some sort of, they've been teasing something coming out today. FSD 14 is supposed to be out any moment. Let's see. They were teasing something, some new something coming out today. See if it's a sell the news event or if it's like the fact that they're going to compete with Nvidia. I don't know. Like, we'll see what happens. Netflix hit the roadmap line. That's the 3-wave thing. That's the first move down, the retrace, next move down, lower low. Now, the question here, was that enough? And we're going on higher? Well, here's the tell. 1264. Well, if we get the daily close above that, odds are we're done on the downside. And we're going on higher. Next upside target will be 1374. Now, if we don't get above this, right in here, if we don't get above that, lower low still in the cards, down possibly 1,000. So just be careful. There's no real good way to tell if that was all of the correction or not yet. No great way. And the fact that this moved down, I'm getting in the weeds a little bit. I'll remove some stuff. The fact that this did a 3-wave move right here, kind of indicates that this might only be the first move. We get a bigger correction back up here into this zone sometime in the next few months, and then we do a bigger downside move on Netflix. Holy bananas. So this is a dumpster fire right there. Look at that. 1 for 75 reverse split. Friend of mine. What? I got a message yesterday from a trader, a friend of mine. Lost a large chunk of money on this yesterday. Betting against this pop. Just be careful, everybody. Be careful. Make sure you have your stop in place. Know when you're wrong. This thing isn't slowed down yet. This company makes no money. It makes no sense. Like, this is just ridiculous. I mean, why should that be caught popping? Like, there's no... I don't think they solved cancer or anything like that. Rare disease drug. Special designation in rare disease drug. It's not even approved. Like, it's just craziness. You know, the lesson here, be careful. Like, don't play with the dumpster fire garbage. It's not my thing, so be careful. That one continue to be crazy. The 2x long on QBTS. QBTS continue to be crazy. Now, there's no, like, the craziest thing to me, these are quantum computing stocks. Like, there's no algorithm. We've not, like, the craziest stuff to me, like, it's vaporware, one. Like, yeah, sure, we've got some, it might be able to do a couple qubits. Maybe we're getting up to 1,000 qubits, but for usability's sake, we got to have millions of qubits. And there's no algorithms that have been proven to run faster on quantum than currently run on existing data center hardware. So what's the advantage of spending these billions of dollars? Like, where's the application that's, you know, going to change the world? Not sure yet. AI doesn't run faster on quantum. Like, that's not really a thing at this point. So I would be careful chasing that one. AppLovin got smacked down yesterday with a government probe, SEC probe over data collection processes. Funny enough, that happens right after we hit the 1272. And we start this process to retrace, to support. Funny enough. AMD continuing to grind under the breakouts. If we get the breakout, be careful. It's got to set up the potential to go higher, but it also kind of needs a bigger, deeper retrace back down in this area to structurally give it enough momentum, you know, enough stuff in the background. You can't just go higher, rip higher indefinitely on hopium. For it to be sustainable and structural, you need a retrace. I'm a trend pullback continuation trader, so I need a pullback to support going higher. But hey, if you long AMD, congratulations. Somebody bought $10,000 worth of way out of the money calls and could have closed them for $2 billion or $10 billion. I don't know, like $1 billion yesterday. Absolute insane. $10,000 to $1 billion. IBM breaking out 306, 315. Dell grinding higher. 2x on AppLovin, STZ. Down below support. If this thing can play out, Constellation Brands, roadmap line resistance, downtrend of highs resistance, and then bigger upside resistance. But this is a danger zone. We could break down and go lower low right there. LEU. Target whip there. Let's see, leverage. TSM going exponential. Just be careful when they go straight up. They usually come down pretty violently. We've got instances of going straight up and taking a rest for a little bit. And that went nowhere for several months after it went straight up. So just be careful. That one straight up till eventually we ran out of buyers. Straight up. Oops. Hit the keyboard on the desk. Straight up. You know, we hit the top here. Tried it one more time and it's like a 618 retrace, maybe a 786. Pretty close. These things just tend to do the same patterns over and over. And then once we exhausted that retrace, back to game on. And we're poking up here. 357 might be where we're heading. Some up here, and then watch out. We could do another big, deep retrace. Everybody keeps telling me, this market, we aren't going to have any big, deep retraces. I keep hearing it from other gurus, like, your stuff's not going to work anymore, blah, blah, blah. My stuff's worked for 100 years. Price patterns are price patterns. Just sometimes things get a little crazy. IREN, look at this craziness. I kind of thought we might stop at 40, but nope. 72, maybe 147. It made sense to stop here. But crazy can keep being crazier. There's the next two upsides. And this did overlap, so the correction on this is going to be, you see how this overlapped with this? Unless that's a 1, 2, 1, 2, and this is the 3 off of that, which, if that's the case, the whole dynamics change a little bit. but that's only a 3-wave, so the whole dynamics here change to potentially finding some resistance at 72. Then a retrace back down, hold above that level there, then go higher again. If that's going to change the way this works. But if this is just a fifth out of that diagonal, here's the thing. If this was a diagonal and these two overlap right here, that's 3 waves, that's nothing, that's 3 waves, that's 3 waves, and then this is just absolute insanity move. When diagonals end, wherever their crazy freaking move ends, it is likely to come all the way back down almost to the point where it started. Single digits. Be careful out there. Just throwing it out there. It's a common price pattern. ICE. This is a clearinghouse, Intercontinental Exchange. Golly, that's overlapping, nasty price action. This might go lower. Vive. Cruising on out, baby. Bigger picture, this could take a trip out to 385. MU. Oh, I meant to close that yesterday. Stupid. We hit the target. It's time to close it. Oklo. Look at that freaking monster move, man. Holy bananas. Had you gotten down? I mean, look at that. 700%. If you were swoofed enough to buy on Liberation Day. Insane. Look at this move, though. It's only 1, 2, 3, and 182. It's where this potential A, B, C train might stop. Similar to Irene. Be careful if we get up to that 182. Can provoke a bigger downside. But we could go for donk levels up higher. This train could keep going. Oklo makes no money. This is the craziest freaking thing. They don't make any money. Nope, no earnings, no sales, no nothing. Talk about a hype train. $20 billion valuation. We're $20 billion with no sales, no earnings, no nothing, and 113 employees. Nice. Nice job. I mean, it's just nice job sowing the dream right there. Circle. If this thing busts out, we have potential upside. We break down, potential downside. Fig, not enough candles to do much with. It did go lower than the IPO. Can this be the bottom? Maybe. Like we can work off of this. You have to ignore all of this over here. Focus on the low. First move up off the low. Doesn't give us any information. If we get a pullback, maybe to a 618, then we can work off of that. But right now, that's all we got. First move up off the low and nothing. Now you could dive in here to a low time frame and kind of check it out. Be like, oh, let's see. But right now, that move up off that low is very corrective and 3-wave structure in nature. Doesn't give me much to work with here. Move up, retrace. We're coming up into that 618. Yeah, there's potential for that to be 5 up right there on that small time frame. The potential to be 1, 2, 3, 4, and we're working on the 5th. And then we'll probably retrace. And if we do retrace something like that, could set up a bigger upside potential. That's how you do it. You jump down, find the subwaves on the daily chart, Doesn't look like nothing. Doesn't look like anything. But that short-term opportunity could be present if we get a retrace back in the 50s for another pop. Bunch of junk. PayPal. Oh, looky. That's a good sign. So it has this potential to drop until we break back above this. If we can break above this, that's a good sign. We're going higher. Could be higher in a big way too. This thing has a nested move up, retrace, move up, retrace. I'm a little bearish on the, wow, I guess pessimistic is the right word. Pessimistic instead of optimistic for this one. It's because it's been such a letdown for such a long time. Downtrend of highs. So first indication we get above that. Next indication we get above that. And then we could take this thing on up to 116, retrace a bit, and push on up higher levels. So downside potential, though, is still sitting out here. A little pessimistic because this price action is so nasty off of that low. Just is not, just doesn't provide any clarity for going higher. But if we can do something bullish here, that is a move up or retrace to a higher low, move up or retrace to a higher low, sets up a bigger upside potential. That move, that move, that move. Yeah. The moves we have in place set up the potential for this area right up here, right at the 618, the big drop. From that high down to that low, be it 160, 170 area right there. That could take a while to get there too. Could be out 26, well into 26, maybe even into 27. But we could also do that because of this whole corrective nature here. We could do that and then still go lower low. So be careful. Hey, thanks, IKEA Key. Appreciate you being a subscriber and a channel member too. A-Lab grinding in here. Leverage, 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 leverage. BRT. Just hunting opportunities here. And nothing. Team. Ooh, nasty. Robinhood, we're coming up into resistance. Be very careful. This is the, we've come up to the point where we're basically at the same size move we did off of this low back here last summer, last August, up through February. We've now kind of made that same size move off the low we made back here in April to now. Same duration, same size. That pullback doesn't look giant, but when you put a measure on it, it's 55% pullback. 55% pullback again, back in the 70s, even possibly the 60s. Please be careful. I don't like to chase things lofty. And the funny thing about the market, you know, in the economy, when a can of soup goes higher, there's less people buying it, right? When things go higher, less people buying it. Maybe it's a more elite status, but less people buying it. In the stock market, when things go higher, you get more people buying until we run out of buyers. Till that last buyer bought, and then it pulls back. It's a FOMO thing in the market, but we don't get that so much in the regular economy, unless it's like something in short supply, like Tickle Me Elmos. So be careful. BTQ, another crazy ARM. Let's see what we got cooking on ARM. So far, This is a dangerous thing with lower highs. This thing could take a swing down. Wi-Fi. Crazy keeps being crazier. WDC. So we might take a breather. That hit crazy levels. So from this big pullback back here that we started in 2014 and we wrapped up in 2020, we just spiked the 1272. Maybe like, look at this. This pattern was a big roadmap bounce. Maybe even higher than this. Let's see. Yeah, 3 month. Look at that. A 3 month roadmap bounce right here. Boom. Did you have I mean, could you stay in this trade? Like the entry was back here in 2024. There was the entry on that close. That's right in there. But you would have had to wait for that pullback. And the entry was at 52. The pullback went down to 28. The stop out was $1 below the low. And then here we are at the target. Isn't that crazy? Same pattern, same. It blows my mind how this stuff shows up every time frame. Same freaking thing. So there's major resistance here. We may retrace the breakouts before we go higher again. Next upside, 218. AEHR, probably come back down the roadmap line. ASTS, turning green. J&J, might come back to the roadmap line. Ooh, look at that. There's your flight to safety right there. People moving into stuff they think the market, or think everybody needs. THI. Back to the roadmap line. If we hold it, this can be bullish, but if we break down below it, we might cruise on lower. Right now, this came up to a 76 retrace and started down again, so be careful. Toll Brothers also exhibiting the same sort of pattern. Roadmap line. Loot. Flutter Entertainment. That very easily could go lower low, even though we went higher high. This could be a big ABC that B waves can go higher than the start point, but wave twos cannot. That's the big difference here. This can still be an A, B, C to a lower low. Still be an ABC correction. So corrections are kind of hard to trade. Dollar Tree, of course, pushing a little bit lower. At 618 level coming up right down here at 80. Probably where we're heading at this point. At which point, was this an ABC? Or was this a somehow, some way, a 1, 2, and we go up for 3? Or was this an A? This is a B, and this would be a C. I don't know. It's difficult to know. S long, not doing much. SEI. Probably going to retrace. All right, stuff was set up for industry today. So the roadmap line is based on Fibonacci EMAs. To answer your question, the question was, your roadmap line is based off of moving averages, right? Not Fibonacci levels. They're saying in the help show, yeah, it's Fib levels. It's Fibonacci EMAs. Confusing for some people, but it's Fibonacci EMAs. all explained in the video pinned to my homepage. Go click the link underneath me here. That's my logo. Go to the channel homepage. I'll walk you through it. What it is, how it works. Basically, an Elliott wave with these EMAs that I have, if you have 150 candles in the pattern, this is something I learned from Jody Samuels at Wavy Tunnel Pro. When you have 150 candles, roughly 100 to 150 candles in the pattern, which that's way more than that. Typically, you'll get the wave 2 and the wave 4 bounce off of the roadmap line. Now, not always the truth, but these repeatable bounces are what I'm looking for, and I trade. So now when you look at that, you're like, well, that bounced and bounced and bounced and bounced and bounced. That doesn't look like a 2 and a 4. Well, that's way more than 150 candles too. When we look at it, from right there, that's 461 candles. So to be on the proper time frame for it, gotta have the right number of candles. See, even still, way too many candles. But you see it, bounce. That's just some rando stock right there. AGYS, set up with the bounce today. Here's the high, here's the low. And I would wait for that bigger picture, but here's the entry, and 116 is the target that it found. It's already in it from back here too. And nice win rate, but the less than 30 trades means it's not statistically significant. So despite having good numbers, it doesn't mean anything. This one bouncing again. That one played out back here when we last talked about it. Firing off again. 288 looks like the target. 288. 10 trade. Update the report, please. Oh, need to. There we go. 52 trades on that one. 71. Not bad. This one's fairly reliable. A little less than average on the profitable trades and a little better than average on the profit factor. Humana, very clean setup here. Here's the entry, 327 targets. $50 trades here, 74, and that's just right on average. This is just an average performer right there. INDI. That'll be the high, that'll be the low. There's the entry, and $5 targets, and I wouldn't touch it. Under 20, I probably wouldn't touch them, but MAR. This one fired off way back here, but we did a secondary bounce. I talked about this being bearish setup when we got that alert back before. There's potential 276. These can play out to the target and still end up failing. This has a bearish, big picture bearish potential ABC for a lower low. Be careful chasing this. It can break down and flush on down. RRX fired off way back here, but we got a secondary bounce inside with a smaller 156 target. TNC. I don't like this action right here. I'm just straight up honest with everybody. I don't like them that sit here on the roadmap line. I like to bounce and go. 86 would be the target. 42 trades, 78, 1.2. And the algorithm here didn't like that either, so it didn't pick that up as an official entry. XPO, and that one fired off back here. Another inside secondary bounce. There's There's the high, there's the low, there's the entry, and 139 potential. That's all the potentials. I'll be on Market Masters at 11:30 with Jack discussing ideas for trades today. We talk a lot about how to credit trade, risk reward, stuff like that. And we're pushing, I mean, this move could be played out right here on the smaller time frame. That pullback, that expansion. We might see this retest again before we push on up. So there's kind of the levels to watch right down here. 67.05, we start below that. Might be indicating we're going a little deeper. If we can hold it, probably 67.78 on the upside, maybe even 6,800. That's what we got. Dun, 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 dun. Well, it's not magic. It's just, and it's entirely possible that anybody could take what I do and make it into something else. So it's not magic. I just packaged it up a different way. Like, this is not something that, crazy. I do have, on my algorithms, I do have some filtering and stuff that I found ups the win rate. Has to be, can't be longer than a certain duration, can't be shorter than a certain duration, and has to have certain criteria. So I apply a few little filters and just up the win rate. But basically, it's the same pattern over and over, all time frames. It's not magic. So have a great day. You count your same save, maybe your own. I'll be back again. 11:30, Market Masters. 5 o'clock. 30 minutes of awesome. I have a guest spot on Profit Panel at 2:30 also. So lots and lots of live time.